Hi everyone, welcome back to Be Rich. Today I'm all alone here sitting in Bangalore recording remotely with the team in Chennai. So Shashwat is away in Dubai with Anand, and Anand's also busy today. So it's just me. So be kind in your comments. Today I thought we'll talk about something very interesting. We always talk about how we should do investing, and if you don't want to do investing, individual stocks and shares, to do passive investing in mutual funds, such as the Nifty index, Nifty 50, and forget about it. And put it on autopilot. And if you're too lazy or if it's too much for you to think about, to do sipping and forget about it, and it's the best way to invest. But there are problems with it. And I thought today I'll talk about this. When sipping and investing in an index doesn't work out as you planned, work out as you think, and things can go horribly wrong. Because the lesson which I want to learn from this is that though we say you can invest and forget about it, like all things, there are no magic cures for investing. Investing only works if there's active participation from the investor. Investing does not work if you do not participate in the process of investing. Wealth cannot be maintained and made to grow if you don't participate. Like anything which we do, such as weight loss or fitness, if there's no active participation, you can just not do it and forget about it. Even in dieting, it's very famously said, you just follow this protocol or you follow this diet and everything will happen. It's not true. As a person who's experienced in dieting and weight loss and investing, and tell you all of it is related. It only happens if you're actively participating in it. So, to talk about how indexing can fail and it can be quite catastrophic as an investor, and you can lose all your money, even if you're just doing something as simple as passive investing, is I thought we'll talk about is Japan and the history of Japan and the Nikkei index. So let's take the chart. If you look at the full history of the Nikkei index from 1970 to right now, current year, you can see how the chart has gone up. It shot up all the way up to 1990, then it collapsed. Then it collapsed quite dramatically, and it stayed there for a very long time. Now it's slowly crawling back up. It's not even reached the heights it was in 1990s. We're getting close to it, but we're not there as yet. So, let's say, for an example, you were born in, like how I was born in 1976, and you start investing. When you start your job in 1996, you start investing. 1997, like how I encourage Keshav and all of you generation, guys in his generation to invest. And let's say you've been investing from 1996 to now 2023. And let's look at the dollar return adjust with inflation. This also, hopefully, my team has put it up on the side, the screen. It shows you the total Nikkei index return in dollars is minus 44. The annual return is negative minus 2. So the dividend reinvestment, if you did, is also minus 17. So if you have been indexing and sipping, let's say if, as soon as you left the Japanese college and in your first job, you've been investing every year, you've been doing nothing but losing. This kind of gives you the explanation why the Japanese population are the way they are, why they're so negative, and why they feel there is no hope, and why there's a huge population decline, why the youth don't see any hope in their economy. Because imagine from 1996, you've been investing now for almost what, 10, 20, almost 30 years you've been investing, and your returns are negative. And you've been waiting on things to get better, prime minister after prime minister, and things have gone nowhere. And let's say you're a generation older and you've been investing from 1982. Okay. If you've been investing from 1982, the story is very different. This team now hopefully would have put up the screen for 1982. That is 1982, your returns is almost 102%. The story is very different. The annual return is 1.7%. You have not made stellar returns, but you have not lost money. So that generation may be looking at it very differently. So this is very important to understand. Even when you're sipping, when you enter the market, when you're sipping also matters. And how long you're sipping also matters. And what Shashwat and Anand have always said, when you're sipping, you're betting on the country. You're not betting on any individual company. You're betting on the country as a whole, the economy of the country as a whole, that it's going to do well in a long period of time. So that's why Shashwat also very famously said that When you're betting on the Nifty, you're betting on India. If you believe in India and India is going to have a growth and Indian growth is going to be great for the next 10 years, 15 years, whatever it is, you're betting on that and you're investing on that per se. You're not investing in any specific company or any specific share. So keep that in mind. So if you see the Japanese economy, the Japanese country has not gone anywhere. That's why their index, if you see, it's not gone anywhere. It's been in the doldrums and it's been there for a very long time. So let's say you only started investing in Japanese economy from 2020. Even then, returns are negative. So these calculators are available online, the Nikkei index calculators and the return calculators, and you can see it's not gone anywhere. But at the same time, you see someone like Warren Buffett, you know, investing in Japan. Yes, it's true, investing in Japan, but he's not investing in the Japanese economy or the Japanese country. He's betting on a certain Japanese company and how the company is doing. And he's betting on the returns from that company. And he's been, of course, given a very sweetheart deal from the Japanese bank and the Japanese lenders, which has also played a big part into him entering Japan. But he's betting on a certain companies. Same way, if you had picked, let's say, from the 1990 collapse of the Japanese index, and you had been tracking a few companies and you betted on those few companies, your returns might be very different. So this applies to India too. When we tell you to invest in the Nifty 50, when we tell you to index and forget about it, we're talking about also keeping an eye on the Indian economy, keeping an eye on what's happening in India. This always pays most important. I mean, I can't explain it to you in any other way than you have to follow what's happening to the country, what's happening to the economy. Though we do say all that is noise, don't pay too much attention. But that doesn't mean pay no attention. You do have to keep some kind of eye and see and track what is happening to the country as a whole if we're not doing on individual stocks, if we're not doing on individual shares, because you're betting on the economy as a whole. So you need to keep an eye on what's happening with the monetary policy. You need to keep an eye on what is the FII is doing. All this matters on a broad sense, not on a micro sense, on a macro sense, on a bigger level. What is happening to the Indian economy year on year? Do you see it improving? Do you see it going down? Is it making sense? So, bringing that all into consideration, is it the right time to start indexing when the Nifty we say is so overpriced? If you see, a lot of guys, analysts will say, including Anand, that they in the PE of the index of Nifty is very high. It needs to correct. It needs to correct. It's very lopsided. So do you enter the market now? Is it too high? Are we going to go down like the Japanese index? It is going to collapse, and are we going to be there for 10, 15 years? Well, that nobody can predict. Nobody can say for sure. From here the Nifty might go down and stay down for 10 years. From here the Nifty might be plateauing, might be hanging around here for a few years and then start going up, or it can go up further. But this is a personal choice. You as an investor, you will have to look at it and say, okay, I believe in the Indian economy, I believe in the macro, the globally what's happening, and then say, okay, this is how I'm going to invest. So these are kind of things you have to keep in mind, even if you're sipping. Sipping is just not you invest and you forget about it. You do invest. You don't have to pay attention on a daily basis or a monthly basis, but you have to pay attention on a wider basis, like in a yearly basis. You have to see how is it going, how is the economy going, are the is it making sense? What's happening in government policies? Are the Indian industries doing well? Are the companies which are participating in the index, are they doing well? How are their results? So you have to pay attention. Same way, like when you're doing your, dieting, you follow a certain diet, you do keep checking your weight. You do keep seeing your energy level. You do keep seeing how you're feeling over a period of time. You do go to a doctor. If you don't know what you're doing, you go to a nutritionist. You have a trainer. Same way, if you're index sipping, that doesn't mean you should not have an advisor. You should definitely have someone who's a competent advisor, who you rely on, who's giving you the right kind of advice. You should see the advisor's track record and make sure they're giving you the right advice. That being said, we are not in this channel. I don't claim to be an advisor. I'm not a SEBI authorized, any sort of person, nor is Anand, nor is Shashwat. These are just our opinions. and what our experience has been in investing and what we see. So, that being said, I hope this video was of use to you. I hope you found it interesting. It's a very short video. It's not our usual long videos. And hopefully next video I'll have Anand or Shashwat with us and we'll talk about this a little further. Why indexing is great, but you also have to be aware of what you're doing. And I will ask Anand also to talk about this in his Tamil channel. So it'll be of use to everyone in the wider audience. That being said, thank you for joining us today on Be Rich. Hope you found the video interesting and informative. If you did, please do turn on the bell notification icon and do share it with your friends and relatives. And we'll see you in the next one. Thank you.
I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.